Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Monday, February 4th, 2008. Well, today was an interesting day for the sole purpose that it was kind of that pause, retrace, consolidation, if you would, day. And in those of you that don't know what consolidation is, it's after a tremendous bounce like we've had off the lows, and you're talking about 200 points or so on the Nasdaq, give or take. You have to have a day where the market pauses. It just can't continue to rebound. You have to have that day or two or three or even a week where the market kind of sits in a steady pattern, pulls back slightly, and that's pretty much what, in my opinion, we saw today. So keep this in mind, folks, as we have had this monstrous move up over the last 2 weeks, and again, we've had 2 positive weeks on the indexes after an ugly January, a decent start to February on Friday. But today was that day where we needed to pull back, and I'll show you the SPY, and we'll kind of walk you through it here. So what we're seeing here, folks, is the daily chart of the SPY. Let me get out my trend tools here so we can kind of annotate the chart as we see fit. Now, again, we talked about this move down here over the last month or so, and you had this reflex bounce back here. And finally, as of Friday, we got above this 20 moving average, and you guys know how important that 20 moving average can be. It took a 1 day here of hitting it and pulling back before we actually got it through it 2 days later and closed up on Friday. But you need that kind of pause day, that pause couple days, where you kind of stay steady to the side and pull back maybe just to that 20 moving average. And this is what we're going to look for here. The question will be in the next few days is, do we continue just to trade sideways to down? And a good movement in the markets would be a move like this. So you have that little pause effect, sideways trading slightly down, where people kind of take some profits off the table. Those that are weak hands pull the profits, and you get that sideways trading pattern. And the key here is, does it stay above the 20 moving average? So again, this is what we're going to watch for on the SPY daily chart, is do we see this sideways pattern, and do we stay above this 20 moving average? As long as we can do this sideways pattern to slightly lower and stay above this 20, it bodes well for another move up. Now, this is where the caveat comes in. Where does it change? Where do we get a little nervous in this market? And that would be as if we pull back and actually pull back underneath this 20 moving average. Once you establish a couple days underneath that 20 moving average, then we start to feel as if there's a possibility for a move back to the lows where we could see a W formation pattern or a double bottom here, and then we'll have to reevaluate that at that point. So again, we want to stay above this 20 moving average, somewhere in this area. And should we come down in this area, and again, it's going to take more than just 1 day. 1 day we close below, the next day we could bounce back above. The key here is, do we see a 1 day close below and then another move confirming that below it? And that's where we could start to analyze, again, the downside. But for now, we want to focus in on where we are. And right now, we are staying above that 20 moving average to the upside. We are consolidating here. And many of you guys might say, well, the Dow was down 100 points today, which it was. And the Nasdaq was down about 30 points today, which it was as well. And we could say to ourselves, well, that seems like a kind of a large drop for consolidation. But when you take into account here, folks, the massive moves we've had in this market, a 30-point Nasdaq move and a 100-point Dow move is very minuscule. 6 to 12 months ago, that was a large move in the markets. But we've had such ginormous moves here, 300, 400 down on the Dow, up on the Dow, 50 to 100 on the Nasdaq each day in the past month. We've had some of those days where a 30-point pullback, especially on the volume today, and the volume I want to bring to everyone's forefront attention, the volume was extremely light. So a 30-point drop on the Nasdaq and a 100-point drop on the Dow, to me, is a small pullback or a consolidation move. And look at the volume here. All right, this is today's volume, folks. Even compared to Friday was here, and looking back at Thursday was way up here. So you're talking about less than 1/2 of the volume from last Thursday and Wednesday was today. That's a very tiny amount of volume. And even going back even further, look at the volume going back here to that bottoming tail or bottoming pattern right here. And this is the volume today. So you have this much volume today, this much going back to mid last week or even the week before that. And this just shows you how light the volume was today and how just quiet the markets were. So in any case, that's what we're looking at here, folks, as we continue to monitor the markets, and we'll focus in on that. On the upside, should we get this consolidation pattern, the upside move will bring us, in my opinion, to this level right here, which will be at that point where the 50 moving average is coming to. All right, so that's where I'm going to focus in there and try and see if the markets take us there. Now let's look at the Nasdaq here. Next on the Nasdaq, and we're going to look at the daily Nasdaq. And the daily Nasdaq is slightly a weaker chart, and I'll show you why. Number one is we did close above that 20, but even today pulled us right back on that 20 moving average. And it's not the same. The SPY is much more above that 20 moving average, while the Nasdaq is already hovering right on that 20 and near again pulling back below the 20 moving average. So we'll have to continue to monitor that. But in general, Techland was very weak today. All right, you had Google down another 20 points after negative earnings last Thursday after the bell. Friday it was down 50 points or so. I think it was about 45 to 40. And then today another 20 points, and Google closed below 500. Now the key here on Google, and I'll bring up Google's chart quickly. All right, here's Google's chart. Look at this fall here from the highs. I mean, that's not a pretty move on a stock pattern. And what I was hoping to see, or what I was looking for, was whether or not Google could close back above 500. Intraday, take a look at the intraday. Intraday, later in the day, we tried to make a move back to the 500 mark. They tried to defend that 500 and get the stock back above 500, which would have been significant to close right above 500, and it would have meant that the stock had defended that level and held above. Instead, we saw a close below, so in that case, you have to kind of step back and say, all right, let Google do what it's going to do here. At least I won't be messing around with it, either long or short, in this situation. A close above, and you could have looked for a long position, possibly to see if you got a bounce from people saying, okay, it's closed above now. This is they defended it. Now we can look to pick up some stock. But as of the close below 500 was very bearish on that chart pattern. All right, now let's just look at the Intraday ES pattern here, and you can see we basically closed at the lows today, and it looks more wild than it really was. Believe it or not, folks, once again we stayed in a general trend pattern all the way down all day, and look at how beautiful that is. All right, you see the highs continually hitting that upper band drawn in, whether it's here, the first hit, or here, the second hit, or right about there, right along here, and of course all the way down here. Every time we hit that line, you saw a continued sell-off in the markets. And what you can also focus in on is a nice little bottom here in the markets from early on, but then we did break lower in that channel, breaking down here, as you can see. So you can see that it was actually here a nice bounce off of it, again a bounce, again a bounce. Even again, we still, even though we closed below, the next candle didn't close even lower, so we didn't confirm the move down there. You got another bounce back to that top line, and one more time we sold, and finally it broke down, and we closed at the dead lows on the day on the ES futures here. And again, very bearish from a chart standpoint intraday. However, as I always say here, guys, volume is key, and volume was non-existent today. It was extremely light. Now, on the bright side, in the day trading chat room today, intraday stock chat, we actually, this morning was a phenomenal day because Chinese stocks ran left and right and every which way. It was one of the most powerful moves up in Chinese stocks in the last month plus. So I want to just touch base on that, folks. And one stock we were holding from as a swing trade, which turned out to be one of the largest gainers of the day, was up almost 40%, and we had held this. We picked it up Friday near the close. We're positive on it going into Friday, and here we look at the move up today. A $4 stock was up about $1.67, so it closed around $4.24 as of Friday. Today it reached as high as $5.94. Just a tremendous upside move on this stock, and it's China Precision Steel, CPSL. Now again, we exited that position long even before the highs were hit, but nonetheless a great profit on a small cap swing trade. And again, we just do the small caps in the chat room because you have to monitor those a lot closer than just sticking a stop out in the market. So that is what we do, and we don't do a lot of swing trades, but here and there we'll do a swing trade, and that one happened to be a phenomenal one. Other Chinese stocks to run, CHNR. Look at the daily moves here, and this doesn't look that big, but believe it or not, it's about 20%. There's a 20% pop in that stock. All across the board, China was up, and the main reason being the Chinese market yesterday was up 8%. The Shanghai index was up 8% last night, and we'll have to see. I believe it's closed tonight based on the holiday, but nonetheless, tremendous moves across the board on these stocks. Now, the interesting thing about that is what happened to cause that jump. From what I've heard, they've had some horrible snowstorms there, just unbelievable weather in China, and the government is actually talking about a stimulus package because of the slowdown in the economy they fear from these snowstorms. Almost looks like they're taking something out of the U.S. book, and I caution them on doing that, to be honest. But in any case, that's what triggered that major move up in the Shanghai index of 8%, and it translated right away in the morning. We knew these Chinese stocks would be hot today, and sure enough, they were. And they will continue to watch them in the days to come, although after monster moves like this, you got to stay back. Now they've priced in that monster move, and there's a lot of downside risk in them, as well as more upside potential. But the risk-reward is not the same as it was on Friday, obviously. All right, folks, that seems about enough for today. So again, keep in mind on the SPY chart, we're going to want to continue to follow those key breakup or breakdown and consolidation levels as we talked about here, and we're going to have to see where we go. Eventually, I do think we'll see the lows again, but the question is, do we have one more push-up before that happens? And we'll continue to follow the charts and update you each day with these videos. Have a wonderful day. Come join the chat room. Come join the swing trade alerts on inthemoneystocks.com, and we'll talk to you shortly. Take care.